CNBC, all the negatives from tariffs are more than offset by the positives in the markets. And like I've been saying in the past couple of videos, this whole tariff thing thus far has been a boogeyman that is a zero. It's a nothing. It's a total nothing. I thought they were going to cause some intense amount of inflation. Hasn't happened yet. I don't see it. I don't see it happening.
The Fed did,
and they're starting to say the same thing.
Basis points, as widely expected, and suggesting 2 more cuts would come by the end of the year. That was kind of the median consensus call among the committee. Joining us now, Jeremy Siegel, chief economist at Wisdom Tree and professor emeritus of finance at the University of Pennsylvania's Wharton School of Business. Jeremy, it's good to have you this morning. I guess we can, if you want to just follow the market's verdict, you often don't get a clean read on the market's reaction to a Fed decision until the next day. I guess 25 basis points was the right call?
Yeah, I mean, they are happy. Let me tell you what really interests me here, that Chris Waller did not dissent in favor of 50 basis points. Remember, he is the front runner, or very close to the front runner, to be called chairman. And not being more aggressive here, I'm just wondering how Trump now would look at Waller. Maybe I missed it. Did you hear any tweet from Trump about the Fed's announcement? I know he's in England,
no, I don't think so.
I did not see anything.
I thought he did, but maybe he didn't.
I was going to say there was the one dissent, which we believe Stephen Myron wanted 125 basis points by the end of. Well,
and previously there was 2 dissents, and even still with that, they were saying that usually there's no dissenting is not normal. That's what I heard pretty recently in a video, actually, is that dissenting has not been normal, but there was a past meeting where they dissented twice, and now what? There was 1 dissenter, so.
A good deal more the rest of this year. But there was some thinking ahead of the meeting that, one of the outcomes could be that, Waller and Michelle Bowman, whoever might have wanted a more aggressive move, could kind of get the statement to frame things in such a way where it's just, look, this is sort of a process most likely, and not necessarily have to have the dissent. So I don't know if that means much to the markets in an immediate basis. It's basically rates are tilted lower at a time when the economy still seems to be hanging in there. We're anchoring to the soft labor market data, which is giving you, an impetus to actually try and take out some of that risk management insurance that Powell talked about, and yet not really respond to any kind of economic emergence.
Roger Ferguson said one of the non-voters, something with the dot plots, which indicated
he didn't even want to cut.
Cut.
He or she did not even want to cut.
Someone wanted 50, someone wanted nothing. So
Yeah.
Kind of a fractured,
we don't absolutely know it was a non-voter. You could presume it. Maybe it was just a show of unity, saying, "Hey, we're with the chairman," and Steve Myron is the only one. The recent appointee was the only one that dissented. It could be a show of support for Powell on all the potential dissenters. It's sort of interesting had Myron not been there, the interference had not been there, maybe there would have been some dissents. I thought there were going to be some two-sided dissents, more on 50 and maybe 1 or 2 on none. Don't forget, I think that there's 6 or 7 that don't think there should be any more cuts after this year. And one then, of course, said that I think we shouldn't have cut at this particular juncture. But they all united, and then only President Trump's recent nominee was the only dissent here. So it could be it could be kind of a this is the way we work things, and
Sure.
I'm interested to see how Trump will respond and whether Waller moves down, and whether we're going to get several of the others that have been
talk about the markets, Jeremy. Talk about the market, Jeremy. I told Mike.
I just want to see. Okay, so this is from July, from the July meeting. And this is Reuters. Fed policy decision generates most governor dissents since 1993. So dissenting is not normal. right? Usually they don't dissent. Usually they just fall in line. Waller and Bowman wanted U.S. central bank to cut rates. Most Fed policymakers would remain cautious amid uncertainty. Okay, right. Shows repeatedly demanded that Fed cut rates immediately. Fed's decision to hold interest rates steady following the end of a 2-day policy meeting on Wednesday. Largest number of dissenting votes by governors at the U.S. central bank in just over 3 decades. I mean, that tells you a lot. That tells you a lot. So it's not normal for there to be dissents. And last time there was 2, and this time there was only 1. I mean, it sounds like Waller just wants there to be cuts, right? Just cut, right? That's what this is basically telling me. The last time a governor dissented was at the meeting last September when Bowman wanted a smaller rate cut than her colleagues favored. Last time 2 regional Fed presidents voted against the FOMC consensus was in October 2019. Fed policymakers have taken a wait-and-see approach to the economic and monetary policy outlook, right? In contrast to Waller and Bowman, while inflation pressures have eased, many officials are worried Trump tariffs will drive up price pressures over time, which argues against easing policy, right? And they've been saying this the whole time. And I will keep saying, in my backyard, I don't see it happening. Gas prices, I always go back to gas prices, grocery prices. They're largely the same as it has been since the beginning of the year, since before Trump even got into office, right? They've been largely the same, which is inflated over the past few years, right? Where it's still high, but let's be real, prices don't just drop, right? They go up over time. Inflation is still part of the system, right? It's just, it skyrocketed over the past couple of years because of COVID policy and, you know, pumping tons of money into the system. Everybody gets multi-stimulus checks, right? Just like intense amount of flooding of the market. And interest rates went crazy, right? They boosted interest rates a lot, very aggressively. And we've been sitting here for a bit. And now it's like, okay, we're getting choked out here. Let's chill. Housing market has been feeling the effects. And again, housing is slow. So the media is just now catching on to the housing market slowing down. People that watch the housing market daily, you know, on a regular basis are able to tell, right? I look at the market daily and it's like prices have been coming down for years now in my area, right? I know that's not in every area of the country, but you've been able to see that, like, okay, oh, even last year, you're like, oh, I think that some areas are going to start feeling it. Some other areas are going to start feeling it. I think that this is going to start spreading. It's not just Florida, Austin, Denver, right? We're starting to feel it in other areas. I'm seeing where I used to live in California. They're dropping prices now. Yeah, I think this is interesting. So dissenting is not normal, right? They're making it as if it's this thing, but dissent peaked in the early 80s under Paul Volcker. That was a period of double-digit inflation. Mr. Volcker led the Fed. Yeah, I mean, that was pretty specific. So that's that.
That this is, in the history of the world, this is today the best time to have ever been in the stock market. I'm just saying, because we're going to hit new highs. And Mike pointed out how many did we hit last year? We hit
55 or something.
But
like that.
none of those new highs were as high as today's new high. Jerry, so this is as good
the
as
market, listen, whatever
Stupid.
negatives
Stupid.
is coming from the tariffs, and they don't appear to be as negative, certainly.
Yeah, I mean, look at that. Look at this chart, right? Look at this chart. 2021, obvious peak, right? Obvious peak in 2022. We come down a bit. Call this cup and handle, whatever the hell you want. Don't matter, but you just see it. And then, okay, we're breaking to new highs. We're up here. Trump comes in. Everyone gets scared because of tariffs. Oh, guess what? Huge buying opportunity. Tariffs don't matter. We're bringing in billions of dollars because of tariffs. Ding, 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 ding. Ring the register. Ring the ding, 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 ding. Right? I mean, come on, like. You don't need these people to tell you what's going on. You just look at the chart and it's like, oh, hello. All this business, this is all just pumping insane amounts of money into the system, interest rates just being shoved to the sky, crazy interest rates.
Feared at the beginning are being offset by the positives of the Trump policy, particularly that tax bill, which was really so favorable to corporate earnings, the deregulation promises, which are, also very, very favorable. By the way, the lower dollar is also very, very favorable to U.S. stocks, since 40% of the profits come from abroad. So, all the negatives from the tariffs are more than offset by the positives that are going on in the market. And so we are up 10%, I think, from when Trump won the election, and at new all-time highs. And listen, at a seasonally weak time, which is the last half of August and all of September, to continue to hit all-time highs is very, very positive, I think, for year end.
Yeah, that would be the the playbook. Yeah, that maybe you get a stutter step and then year end should probably follow through to the upside. Professor Siegel, thank you very much. We're going to have to run.
All right, there it is. Also, the whole thing with the dollar being weaker, which, it's fiat currency. It dropped. It's like inflation is part of the system. Fiat currency, so going, inflation happening and going higher is part of the system. So is the deflation of fiat currency. That's part of the system, right? It's inherent, right? It's given. Right. So some amount, right? Whether it's aggressive, no different than we had aggressive inflation the past few years, or if it's just baseline, which, Fed wants 2%. That's still inflation, right? It's inherent in the system. Same thing with a deflating dollar. So, of course, assets, things like the stock market is going to do well when the dollar drops, because it means people are taking their dollars that they earn and putting it into assets like the stock market or like housing or gold. Look at gold, right? Gold right now is gangbusters, right? Bitcoin, etc. Their business, whatever, right? Into assets, out of dollars into assets. If you hold dollars, it's inherent in the system. It's inherent. They drop in value. What you can buy now with this dollar goes down as time goes on. That's how the system works. Play the game. Here's the rules, play the game, right? That's what it is.